Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. And it's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio. This is going to be a portfolio update. That's what this video is. On a weekly basis, and if I get a bonus at work or do a side job, I'll do large purchases as well. I cover any options that I've looked at for the week in this update, any stocks that I've bought, stocks I've sold, any dividends paid out. You will see that every week out in the open. I'll reveal my portfolio, all the positions in the portfolio, whether I'm up, whether I'm down, the dividends that have paid out, and again, all out in the open on a weekly basis every Sunday morning. So if you're into that kind of content, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, videos like this, what dividends we were paid for the week. I also do a stock pick of the day series Monday through Thursday, so that we can see a stock on the day that's pulled back and see if there is any value there. And then I also do a couple other video series, the dividends paid out for the month as we are right now, turning from July into August. I will reveal all the dividends that were paid out for the previous month, how much I made total. And then I also do a video that was just released, the stocks I'm looking for in the next month as well. So if you haven't checked that out, it's four stocks I'm looking to buy in August. So go ahead and take a look at that video. This one, like I said, will be a portfolio update. So let's jump right in. We did add $1,500 to the portfolio. Let's see what we did. So no options again. If you've been paying attention for any time or length of time or watching for any length of time, I've said a couple of weeks back that I'm going to set a little bit of cash on the sidelines right now. That I was using for options and try to build that back up. The last options wheel that I was running was on CVS. We did go ahead and buy those CVS shares. So trying to build back up the war chest, so to speak, the cash fund, so that we can do some more options. Probably take another week or two before we're back into the options, but nothing this week. Now, we did get some dividends. On July 26th, we got dividends from Cisco Systems, ticker CSCO. We received $64.69, and we do have the DRIP set on. For those of you who may not be aware, DRIP stands for Dividend Reinvestment Plan. So it basically just means that whenever a company in the portfolio pays out dividends, the cash that's paid out, this $64.69, goes right back in and buys more shares of that company. So we picked up 1.21374 shares at $53.29. Now the only downside to this is it's at whatever price it is on the day that they paid out, whatever the market is, you're going to pick up those shares. So in my mind, this $53.29 is a little higher than what I want to pay for Cisco, but it is what it is. Unless you take the DRIP off, and then you're going to have to do something with this $69.69 or $64.69. Right now, I'm leaving the DRIP on. I'm going to automatically reinvest these. I'm going to let these compound over time, let that snowball do its thing. Maybe in the future, I'll turn it off. But again, the DRIP is set for now. And that $64.69 added $1.89 in future income over the next year. So this is that snowball effect. This is the existing position, Cisco, buying more shares of itself. And even though that's only $1.89 over time, I'll take it. Every dollar and penny and dime matters in the long run. Now, we added our first capital in our biggest tranche here on July 27th. We added $1,310.49 of that $1,500 to the portfolio. And with those funds, we picked up 20 shares of Siboney-Stillwater, ticker SBSW. This is out of the material sector. We picked up those shares at $7.24. And I've been adding to this one pretty consistently for the last several months. I feel it's very undervalued right now. I am down in this position, so I am decreasing my cost basis and increasing my future return and potential return in the future as well. So this is one, again, you're probably, if you've been watching for the last few weeks, notice I've been adding to. Pfizer is also one I've been adding to recently here over the last month or so. We added 10 more shares, ticker PFE, out of the healthcare sector. We added those shares at $36.22. Kraft Heinz, we added 8 more shares, ticker KHC. This is a consumer staple company here. We added those shares at $36.20. And NextEra Energy, the most recent addition to the portfolio, added back in NextEra Energy. We owned this a couple years back, then sold it whenever it ran up a little bit. Now we're back to adding shares. Again, NextEra Energy, ticker NEE, out of the utility sector. Our utility sector is not bare anymore, so this I think doubles our position up to 14 shares, but we picked up these 7 shares of NEE at $73.43. This $1,310.49 added and the shares it picked up added an additional $52.69 in passive income. Very nice to see here. And we weren't done. We did spend a little bit more on Friday, July 28th, and we picked up 4 shares of Enbridge Inc., ticker ENB, out of the energy sector. We picked up those shares for $36.57. And this is also one, if you watch the 4 stocks to buy in August video, Enbridge and AT&T are both 2 that I'm looking to continue to add into the month of August. And there it is, AT&T, ticker T. We picked up 3 shares at $14.59, and AT&T is out of the communications sector. And the $190.03 we added in funds on July 28th added an additional $13.85. So all total, we invested $1,500.52 there, and it added $68.43. So the $13.85 here, the purchases from the 27th and the Cisco dividend shares totaled $68.43 in passive income added to the portfolio. Very nice week overall. Anytime I can add over $68 in annual income in a week, I'm going to do it. I really think that is a nice number. I am looking forward to this continuing to grow over time as the positions pay out, and I don't really have to increase what I'm investing from week to week to see the increase, because it should start really rolling that snowball along here pretty quickly. Now let's run through the sector allocation real quick. Overall portfolio, communications is making up 8.17% of the portfolio. Consumer discretionary is this little sliver here. These are their 2 shares of Williams and Sonoma from whenever we were running the wheel on that one. 0.18% of the portfolio. Consumer staples, 5.85%. Energy sitting at 6.63. Financials, and this is part of the reason we're adding to Kraft Heinz, Enbridge, maybe even Enterprise Product Partners here over the next couple weeks as well, because we want to build out some of these smaller pieces of the pie, right? Consumer, I'm hoping that Williams and Sonoma pulls back again at some point so I can add there. And then there's a couple other companies I'm looking at, Best Buy, maybe in that sector. So some of these smaller ones, utilities as well, we're going to look to focus over the next year here as they present value, hopefully. Financial sitting at 11.74% of the portfolio. Healthcare sitting at 19.21, largest piece of the pie here, and we're going to continue to add, even though I don't like any one piece to get over 20%. Pfizer is just too cheap to ignore right now. If CVS was to dip back in, I would add there, and if J&J was to dip back down, though J&J, part of the reason this is up towards 20%, J&J has really jumped up. Johnson & Johnson has really jumped up over the last couple of weeks. Industrial sitting at 8.92, technology sitting at 8.79. Materials is the second largest piece of the pie, sitting at 15.88%. Utilities is this sliver here, 0.64%. That's the NextEra Energy additions that we're going to continue to make. I'm hoping that it stays under 75 over the next month, and we can really build out this piece of the pie here. And REITs and real estate sitting at 13.99% of the portfolio. No ETFs. Really, this is my ETF. I'm creating my own ETF. The shares in the portfolio, that's what I consider it. Now, this is the same thing, sector weights, but just looking at it, you can see the percentages. You can also see how much money, how much funds I have allocated to each sector as well. Consumer discretionary, definitely the smallest, with only those 2 shares of Williams and Sonoma at $281.06, followed by utilities at $1,020. So like to build out some of these smaller pieces of the pie, but I'm going to wait and do it whenever there's value there. So right now they're just going to stay that way. Let's keep on going and show you the fun part. The overall portfolio reveal, what a lot of you like to see from week to week. And I don't blame you. If someone's going to get online and talk about finances, they better be willing to show their own. So I don't mind showing my portfolio. Hopefully this helps you see how someone's actually doing it, that you can do it. You don't have to be, like I said, a financial guru or have some education in finances or anything like that. I've mentioned it several times on this channel. I grew up in a double wide trailer in a small town. Yes, I have a bachelor's degree and a pretty good job, but that's not how I started out. I wasn't born with a silver spoon, and no one taught me this. I taught myself along the way, and you can too. And watching some of these built out over time, I think does help. I hope it helps. If nothing else, like I've said before, I hope it inspires someone to at least give it a try. And if index funds are more your things and you don't want to do investigating into individual stocks, VOO is S&P 500 index or ETF that you can follow. There's several others out there if you just want to set it and forget it, ETF or index fund. I would suggest the S&P 500. That is what everyone is trying to match or beat. Anyways, here's all the positions in the portfolio, the ticker they are, total shares, how many shares I own, current price as of the close of business on Friday, market value, current market value as of the close of business on Friday, average share price. This is my average cost, how much I have into the position. This is each individual position. Whether I'm up or down here, total returns. If I'm in the red there, that means I'm down. Same thing here. This is just a percent return, up or down. And if I'm in the red, I'm down, right? Some of the biggest positions I'm down in, Verizon down here, AT&T, SBSW. Next one, Enbridge, right? I want to bring this cost basis down while this is down. Kraft Heinz, the other one. So part of the reason I'm actually adding to some of these too is to bring the cost basis down while they're below my cost basis. And some of the bigger positions I'm up on. I'm up 52% in OC, which that's a huge percentage, up 52. This one just keeps on screaming. I was hoping that it would stay low so I could continue to add to it, but it did not do that. That's Owens Corning. That's a building supplier there. Another one that I'm up on, Union Pacific, the railroad company, up 19% there. Williams and Sonoma, I wish I'd have bought more down here in the 120s, up 16% there. Up 11% on Omega Healthcare Investors, up 12% on Lyondell Basel. A lot of these are up. HP Inc., HP ticker HPQ. So a lot of these are up now. Enterprise Product Partners up 8%. Ally Bank up 17.23%. So what sector the companies fall in? Quarterly dividends, whether they're quarterly, monthly, or semi-annual payers. Their current dividend yield, my yield on cost, the portfolio weighting. So on the previous slide, we saw the sector weightings. This is by position, right? Ally makes up 4% of the portfolio, Bank of America 7.75, so on and so forth. Estimated annual income in this column, what months they pay out their yearly dividend growth, right? And where they sit at 15% of their 52-week low. And I like to keep these numbers so I know what companies I can invest in. Ally Bank, for example. Well, let's pick one that's under our cost basis. Here, Bank of America. See, my cost basis is $33.46. It's currently under my cost basis at $31.90, but it's got to be within 15% of its 52-week low. So it's got to be $30.26 or under for me really to add to it. So even though it's under my cost basis, this is not one that I would add to because it's above its 15% of its 52-week low. Let's run through the totals. Total shares sitting at 4,385.882. Market value of the portfolio, $159,408.91. My purchase price, $154,381.96. My total returns, I'm up $5,026.95 or 3.26%. Current yield sitting at 4.69. My yield on cost, 4.82. And this is what it's all about, in my opinion. The passive income provided by the portfolio, whether the market's up, down, or floating sideways, $7,475.85 in annual passive income provided by the positions within the portfolio, and this continues to grow week after week as I add new capital to the portfolio, as the positions in the portfolio pay out dividends, as some of them increases their dividends. As a matter of fact, Bank of America just recently raised their dividend from 22 cents to 24 cents, so that's part of this increase from last week as well. So those are the ways that snowball increases. So again, it's me adding new capital, the positions in the portfolio buying more shares, and when they increase their dividend over time, that also helps this snowball grow faster and faster. So the dividend growth sitting at 8.08% year over year. So if I was not to do anything based on the raises, the projected raises that these companies are going to make, this portfolio would grow 8.08% at a minimum by them raising their dividends, just like Bank of America just did from 22 cents to 24 cents. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks that we are buying. Hey, let me know what stocks you bought this week. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. In the Stock Pick of the Day series, for example, if you have a stock you'd like me to cover and see if there is presenting value there, go ahead and drop it in the comment section down below. Did you get paid any dividends this week? Did you do any options? Again, go ahead and drop those comments down below and let me hear from you. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk against money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.